This is David W. Williams, also known as Diamond Dave. And what we're going to talk about is why street rappers and you need a really, really good insurance policy. And this is going to be a persuasive argument. So what I'm going to try to do is I'm going to try to persuade you into a certain set of beliefs. So you have currently a set of beliefs. I'm going to try to persuade you into a different set of beliefs. And what we're really trying to get you to understand is that as an investor, as a person that desires to build wealth for your family, because as an investor, it's not really about you. It's about your family and the people that are coming after you. As an investor and a person that decides or has made a decision or desires to build wealth for your family, why you need an insurance policy as a foundational piece to your wealth building. And the reason why we're going to use Vonn and we're going to use Duck as examples is because I understand that a lot of people like to use these guys as avatars because of the life that they live. They think that they have some type of identification with these guys, even though they have never lived a life that these kind of guys have lived. However, because I understand that I can use these guys to get people's attention and to get them to listen to what I have to say, we're going to allow them to be a parable, right, for the point that we're trying to make. And then we're going to transfer that parable to you, who's the regular, average, everyday, ordinary person. And even though you don't live the same life as Duck and Vonn, the exact same thing that happened to them can also happen to you, because a death is a death regardless of how it happens. It triggers something. And we want to understand is that we want to trigger to create a certain set of events in our favor, as opposed to having everything going against us, right, when the death trigger takes place. So we're going to go ahead and go into this. And I really think that this can be very beneficial to you if you really start to understand that the game that I'm trying to give you and you're able to receive it. This is not going to be trivia, right? This is going to be actual game to try to get you an understanding. And this is going to be something that a lot of you have not been taught, because a lot of our people really don't understand how to build this and structure this particular type of wealth building situation properly. So we're going to go ahead and get into why street rappers and you need a really good insurance policy. And so let's look at Vonn, right? So Vonn, and let me give you a heads up. So Vonn and Duck, if you really start to understand from a geographical standpoint where they're from, they're really, really low key from the same area of Chicago. Lawrence and Parkway are really not that far from each other. My mother's side of the family really is maybe 2 or 3 blocks, maybe 2 or 3 to maybe 4 blocks east of where Duck people is from, which makes them 6 or 7 blocks east of Parkway. I was always thought that was the Woodlawn area, but I guess over time, everybody kind of factionalized into their own little separate area. I always thought that was Woodlawn, but I'm not from Chicago, but my family's Chicago. I'm from the South. But they're really, really close to where they're from. And so it always was interesting to me that they had so much animosity for each other, even though essentially they live relatively 2 to 3 blocks away from each other, if you actually look at that on the map. And I wanted to kind of use their life because when Vonn got killed in Atlanta, I said to myself, this guy was really starting to get his career going. He was really starting to make some money. And I kind of understood that he had a desire to make sure all of his people was good. And because he died at such a young age and he died so suddenly, he was not able to really reach that potential. And what I would have done for Vonn if I was representing him, because I understand what I understand now, and I understand how he was living, is I would have told Vonn, if I'm going to represent you management wise, I have to put an insurance policy against your life. And the reason why I have to do that is because you have a history of violence. You're a violent person. And I'm not saying that as a negative, as a pejorative against you or try to downplay you, is that you have a history of violence in the street. And one thing I know about being involved in violence in the street is that eventually one day you're going to be on the losing end of a situation. That's just how this works. So if you continue to get involved in violence on the street, 2 things are going to happen. One day you're going to come out here and you're going to get into it with somebody, they're going to kill you. This is how that's going to work, because you're not going to always win every scenario. Or you're going to do something to somebody and you're going to just end up doing a long amount of time in prison, because the way most states work, or the state level or the federal level, is once you get a large history, but especially a violent crime, they're going to look at your jacket and they're going to say, you know what? You've got into a continuity of doing this stuff. They're going to label you as a predicate. They're going to label you as a career criminal. They're going to say that you've got into a continuity of criminal behavior. You've decided to dedicate yourself to a life of crime. And we're going to validate you as that kind of person on the state or the federal level. And then we're just going to remove you out of population. So now you're going to be looking at 15, 20, 25 years in prison. So those are the only two places Vonn was really headed. I can't necessarily protect him against the incarceration, right? Because the only way you can do that is maybe if you got a lot of money to fight cases. And if you look at Vonn, the way he got killed is that he already had a case in the state of Georgia, I believe, right? That even if he doesn't die, everything he did was on camera. So that assault that took place, right? He probably would have ended up right back in jail in the state of Georgia. And the South is a little bit different. And I'm not from Georgia, I'm from Florida. But the South is a little bit different from other parts of the country, except maybe the West Coast. They will lock you up. They have no problems putting you in prison for small stuff. So it was very likely Vonn was headed back to prison anyway, because of his behavior and because of just how he carried himself. But all we can protect him from is his death, which is what I would call the black swan event. So as an investor, you hear about black swan events, which essentially these events that take place that are going to be very, very traumatic, right, to a market. So all we can do is protect against his death. I can't make him not do certain things. And so my question is that if I would not have been allowed to insure against his death, I would have told him I can't represent you from a management capacity. Why? Because you're not letting me do my best job as a manager. You're not allowing me to do it. And I'm not going to allow you to be out here exposed because it's not about you. Vonn had 3 children. He also had a sister and he had a mama. So what you're doing as an investor is never about you. It's about your descendants and the people that are going to be here when you're gone. And so the question is, Vonn is gone. What is going on with the people that are currently here right now? You understand what I'm trying to tell you? And so this is what you have to understand is that how do you protect and build something for the people that are going to be here when you're gone? And if you're like a person like Vonn, where you're currently engaged in this street violence, you got to understand is that I know you're operating with a lot of confidence, but the way this thing works is that you just got to be a little bit slow one day. All you have to do is not realize that somebody's on the other side of the car, and they are, and they come around the corner and they just kill you. And that's how this works. It doesn't work any other way. It never has and it never will. So the likelihood of him dying on the street was extremely high. And I understand that because I'm older than Vonn and I've seen people die the exact same way he died. So none of that was brand new to me. It wasn't out of this world. It didn't blow my mind because I've seen that. And I know that's how this goes, right? So now you're going to have, I know we got a lot of super fans of particular people on social media. You know, you got people that can probably tell you what kind of gas Vonn put into his car. So they may come and say, well, you know what? Vonn owned his masters, and he also didn't sell his publishing. And the question I would have to them is that him owning all his masters as a recording artist and him never selling any of his publishing as a recording artist, does that speak to his acumen and his ability as a business person in the space of music? Or does it speak to the fact that publishers really didn't feel like his music had any real commercial intent? Because if you're listening to this audio and I said, hey, you know what? I'm going to give you Michael Jackson's masters. You know what that would mean? You would have Michael Jackson's masters. Because if you don't understand how to administrate those masters, you having those masters don't mean anything. So an artist that doesn't understand how to administrate, right, his music doesn't mean anything, the fact that you have 100% ownership of it. Because you still have to figure out how to commercialize or capitalize on the commercial ability or the commercial intent of this music through partnerships with people that have the relationships and the expertise in that space to make that happen. So it may not do his children any good that he owned all his masters and all his publishing, because Vonn essentially was an avatar for people that wanted to know what life was like on the street. And what we've seen is that when these avatars die, then they just go and look for the next avatar, right? Vonn was not Tupac to where 20 years later, his music's still going to be selling. He's not that guy. And it's not a disrespect to him. He's not Tupac. So the question is, a year from now, 2 years from now, 3 years from now, when everybody has moved on to their next street avatar that they can try to live through so they can imagine what life is like on the street, will Vonn's music be generating any streams? Because all he can generate now is streams. Ain't like he can go do shows, right? And it wasn't like we're in an era where people are still selling physical. So him owning his masters and him never selling his publishing may not be beneficial to his children in 10 years or 5 years. But having an insurance policy against his life will put his people in a position to where when the black swan event of his death comes about, which was very likely to happen, I would have sat Vonn down and say, bro, it's probably a 70-80 chance you die. It's probably a 70-30 chance you die here on these streets because of the way you living. You're a violent person. You keep ending up in these violent situations. That's whatever. That's how you want to live your life. Do what you do. But sooner or later, you're not going to win. So what do we have set up to protect your family against your death? And the way we do that is we ensure your death. So when you die, your family don't get left with nothing, because Vonn, because he died so young and because he died so suddenly, he didn't get enough time as a musician to build a catalog, right? Where it could generate $5-6 million a year in publishing revenue every year. He didn't have those kind of songs. He didn't have enough time to put that kind of work in the game. And they say, well, he got some stuff on back catalog. Okay, cool. But was Vonn that kind of prolific? One, was he that talented of an artist? And was he that prolific of an artist where he was able to create enough music where his children can continue to live off that for the next 2 to 3 decades? Okay. Now we're going to go into Duck, fbgduck. And we got to understand about Duck. Duck was in the same scenario that Vonn was in. You into it with people out here in the street. Really what we found out is that your name was in the hat. And what I mean is that your name was in the hat, and it's not to be disrespectful to none of these people. But, you know, that's a term that we use down south, is that essentially, man, people was looking for you, bro. And your name was in the hat, and somebody decided to get your name up out that hat, and they was looking for you. And when they finally caught up to you, you know, they did what they did. Well, you got to realize Duck was in the same scenario that Vonn was in. This is only going to go so far before you lose. And losing means you die in the street, or you may end up in prison. But it's only going to go so far. You don't live this kind of lifestyle and you just keep getting into these scenarios over and over and over and over and over again. And you 45, 50, 60 years old and this same type of stuff is going on. That's not how this works. You got to either say, you know what? I'm not going to do this anymore. I'm going to separate myself from this life. And it's not about you leaving the city, because Vonn got killed in Chicago because he took his behavior from Chicago down to Atlanta. So Vonn got killed in Atlanta, because he took his behavior from Chicago down to Atlanta. So Duck could have left Chicago. And if you go to Modesto, California, you go to Madison, Florida, you go to Palatka, Florida, you go to Americus, Georgia, and you engage in the same behavior, you're going to get the same result, right? Because people are people, and you know what you're involved in and the way you live in, it can follow you, right? Because it's about your behavior, not about your geography. Okay. So we saw Duck get killed because Duck's name was in the hat. Okay. And who didn't see that coming? That really was savvy and really laced in this game. Now, the people that was using Duck as an avatar for life on the streets, all they cared about is he produced some more music. That he was their avatar for this tough guy on the streets that wasn't taking no shorts, yada, yada, yada. But people that was really savvy and really laced in this game, they knew exactly what was going to happen to Duck. It was just a matter of time. Okay? The guys from a city of hits. Chicago got a history going back 100 years of people getting hit. That ain't nothing new. So Duck is just in a long line of guys that got hit in the city of Chicago. Black, white, Jewish, Irish, Italian, whatever. Right? Same story, right? Just a different beat that's being played. Okay? So me managing Duck, same scenario. If I can't insure your life, I can't manage you. I'm not going to allow you to operate because you got a child. You told me you want to get your mama off Lawrence. I'm not going to allow you to operate this way if I can't insure your death. I can't manage you because I'm being irresponsible as a manager, and I'm not going to be involved in this because you're now allowing me to do my best job as a manager. So I would just resign because I know where this is going because I've seen it before, right? I know exactly where this is headed. So he gets killed. He got a child from what we understand. His mama's still where she's at. And you can go look online and it'll tell you his net worth, yada, yada, yada. I can go put on the internet that Duck's net worth was $20 million. It don't make it true. Okay? So the question is, what kind of hedge as an investors, we learn about hedging against traumatic events or downturns in the market. What kind of hedge have we protected against Duck's death? Because we can look at Duck's life and understand this is where it's trending. So we believe that he's going to end up here, but we just don't know when it's going to happen. So what do? We have to hedge against it. You understand what I'm trying to tell you? And so I wanted to use these guys as very, very extreme examples of why they and you need an insurance policy. And I'm not here to sell insurance. I'm not an insurance agent. I don't have an affiliate program with an insurance company. That's not what this is about. What I'm trying to get you to understand is that looking at life as an investor and how to structure your life properly as you're going on this goal to build wealth, because building wealth is a journey. It's not necessarily a destination, but something can happen before you hit a milestone to vanish you and to take you out of the game. So in my opinion, I'm not a financial advisor, right? I'm not here in that particular capacity. I'm giving you my opinion and my analysis. What I would have recommended to both of those guys was a term life insurance policy, right? Not a big fan of whole life for a lot of different reasons. If you sell whole life, I'm not against you. I'm just not a big fan of whole life. What I would have recommended to those guys is a term life insurance policy, right? In case of their death, the policy pays out. And what it means is that because they were never really allowed to become really, really successful as artists, their catalog, even if it gets picked up by a publisher, is not going to generate that kind of revenue to where their children are not going to have to worry about any kind of financial situation until they become adults, even after adults. It's just not going to do that. So what you got to understand is that how do we protect against that, right? Because everybody loves these guys and their fan base loved them because they were their street avatar of life on the street and life in this factionalism and this rivalry that squares think is cool. They're never going to get involved in it, but they think it's cool that somebody else is involved in it. But at the same time, that lifestyle is what's going to get you up out of here. It's going to either get you killed or get you sent to prison for a very long time. In both scenarios, your ability to generate income and your ability to build wealth is going to get cut off. Now, we can't protect against the prison because once you get in there, we playing a totally different game because there's certain situations in which you locked up. They don't even let you do commercial endeavors. But against your death, we can do something to protect against that black swan event. So we have to hedge what we can hedge against, right? We can only protect ourselves against what we can protect ourselves against. Because we can't get you to stop doing this because this is your identity. You may believe that if I stop doing it, people are not going to like me anymore. If I stop having this type of stuff, if I stop being involved in this, I'm not going to be appealing. So all we can do is try to protect your family against your demise because of the lifestyle that you're living. So what they needed was a really, really good term life insurance policy. Now, the question is, well, why did they need it? Well, they needed it because they was going to end up dead anyway. And that's just a reality. And what it does is it creates a floor, right, of wealth or income, however you want to specify it, because they're not going to be allowed to build it up. So we get a 20-year, right? Let's say we go to Vaughn. We say, bro, we're going to reach out to this particular company. I want to get you a 20-year that's going to pay out $2 million, right? And you're just going to pay the premiums. And with Vaughn being a relatively young person, if he was in relatively good health, the premiums wouldn't be that crazy. But when you're looking at a 20-year, let's say you take a 20-year, pays out $2 million on your death. All you do is look at the premiums and you decide, well, you know what percentage of the policy am I paying out in premium? Even if they told Vaughn, we want $2,000 a month. We want $5,000 a month, right? That's less than what we would get paid out, right? If he died in year 5 or if he died in year 10. You understand what I'm trying to tell you? Same thing with Duck. Can we get a 2-year? Can we get a 5-year? What premiums do y'all want? You see what I'm saying? Now you have terms now where you don't even have to go get a physical, even though the premiums are going to be higher because they have to hedge themselves against that unknown, right, in your medical history. So you got to understand is that this is a way to protect them against what we knew or what I knew was coming. And I wasn't trying to think negative about them. I just knew how they was living and I know what they was involved in. It was some very, very serious stuff. And this is how they protect their family against them dying unexpectedly before they can get into their wealth position. Because wealth a lot of times takes time to build. It takes time for things to compound. And so once you start on the journey and you die in year 5, right? Unless you're a professional athlete, most likely you haven't been able to build wealth in that short amount of time because wealth was built over time. Now you may be listening to this and say, well, how does it apply to my life? You need the exact same situation. If you are a 25, 30, 35, 40, even 50-year-old person, most definitely if you have children, right? You need to start thinking about a term life policy that protects against your death, especially if you are the kind of person where you have the mindset and the identity of I'm an investor and I'm trying to build wealth. Why do you want to do that? So let me give you a scenario. I got multiple scenarios, but let me give you one. So let's say you're 30 years old and you have a 3-year-old child. You've decided that, you know what, I'm going to start building wealth because I want my child to have a totally different experience as an adult than what I had. So your goal is to start building out multifamily real estate properties. Okay, you're 30 years old. You're going on that journey and you pass away at 38, but you've acquired 2 properties. That's great. Those 2 properties may be cash flowing you a few $1,000s a month. That's great. Okay. Even though at that current time, you still owe on those properties. So you still owe the bank, but they're still cash flowing you. Well, the problem is that because you died so young, right? You have not really had the ability to build wealth properly yet. So you haven't gotten there. You started off with the real estate. I would encourage you to start off with a floor to hedge against your demise first. So instead of going right into the real estate, get you a term life insurance policy. Let's say hypothetically it pays out $500,000. You're 30, you're still relatively young. You got good health history. Let's say you're paying, and I'm just giving you this number. I can't tell you what the number is going to be. Let's say you're paying $100 a month. So you're paying $100 a month for this insurance policy. It's going to pay out $500,000 cash on your death, 20-year term. You die at 38. Your child is 10 years old. They get $500,000, right? They get $500,000. That $500,000 now can help them the rest of their life into adulthood. It's not what you wanted to have. It's not what you had goals on building, but it's better than nothing. And like I said, it's your floor. Build your floor first as a wealth builder, then build off your floor. Build your foundation first. You look at a house, look at an apartment building, you look at a skyscraper. The first thing they do is they go in and build that foundation. And then a lot of times the height of that particular building is dependent upon the foundation that was built first. Build that foundation because anything can happen on the journey and you got to protect against a black swan event. Well, what is a black swan event? Your untimely death. People die all the time on random things. Just on the humbug, people pass away. So I understand that you're trying to build wealth. You have the identity of an investor, but as an investor, you have to hedge against a downturn or a black swan event in your life. Let me give you another example, especially for people that have children. So you got children, right? You understand that if something happens to you, somebody in your family is going to take care of your kids. That's cool. However, why would you want them to get your kids, okay, and a bag don't come along with it? Because now they're under pressure to take care of your kids. There are some things that you can do through the state. If they take custody, they can sometimes get money based on how y'all structure that, right? But even then, if you do that, you can still have a bag come with your children. And it's really easy to do. You get you a term life policy. So let's say you a woman, you 25 years old. You got 2 children already. You just go get you a term life. Same scenario. $500,000, 20 years. Let's say, unfortunately, you come down with some type of rare disease and you pass away at 30. You already talked to your sister about the fact that she gonna take care of your kids if something happened to you. But you know what also happens? Your kids come with a $500,000 bag. Because at 30 years old, you really haven't had time to build a lot of wealth, right? To build a lot of a stock portfolio, to build a big bond portfolio, to build a big cryptocurrency portfolio. But this is a way in which you can build a foundation for your wealth. So when this black swan event happens in your life, you have something. Because anything can happen. And as an investor, you have to understand is that anything can happen. So how do you hedge against what you think can happen and what you can protect yourself against? So you want to understand is that term life insurance is a way to protect your family till you get wealthy. Because the goal is this. So let's say we got the 30-year-old man with a child. We got the 25-year-old woman with 2 children. Okay? Over the 20 years, your job is to build wealth, to focus on that, to make that your goal. Your goal ain't to get caught up on what these people talk about on social media. Your goal ain't to get caught up on, who going to be in the Super Bowl. Your goal ain't to be talking about who's on the pitcher's mound. Your goal not to be talking about this entertainer or that entertainer. Your goal is to build wealth over the next 20 years. Because what are we trying to do? We're trying to make our wealth that we're building exceed the policy over the next 20 years. So if we got a $500,000 policy, we want our wealth over the next 20 years to exceed that policy. So if we pass away in year 21, what our family will receive is going to be greater than what they would have received if we passed away in year 20 of the insurance policy. So we're on a journey to make that wealth exceed that policy over that next 20 years. But what do you have in place? I have a floor in place to where if a black swan event happens and I get taken off the planet, at least my family gets something instead of nothing. You understand what I'm trying to tell you? So this is how you want to structure it. And then once you have that in place, then now you go about building the wealth. Get into real estate, get into cryptocurrency, get into precious metals, get into stocks and bonds, right? Then you go about going and pursuing those things, but you have the floor in place in case, you driving somewhere and you get into a 3-car accident and you out of here. And you on year 3 of your wealth building journey. And it's you're able to insure yourself at such a high payout for such a low premium, especially if you're relatively young and you're in really good health. You got to take advantage of that situation, in my opinion, not investment advice. So I want you to really think about these things because I'm not promoting any company. So people say, well, what company should I go look into? You need to go research it. I would tell you, in my opinion, go with companies that have been selling insurance policies for a very, very long time. You got companies in America who've been selling insurance over 100 years, right? Don't deal with any of these fly-by-night operations because they may close up and that'll be the end of your policy. So there's companies been selling insurance over 100 years in America. They've been around a very long time. Those would be the ones I would consider. But I'm not here to say you should get this one company or this. That's not what I'm here for because I'm not an affiliate in this particular space. What I'm trying to do is give you some game on how to build this properly, right? And structure this properly so you don't get left out and your family, most importantly, don't get left out in the cold if we have a black swan event in your life, because people die every day. People die every day minding their business, not even doing nothing wrong. And it just goes that way sometimes for them. And because nobody came and introduced these things to them and really laced them with this kind of game, they didn't even know they didn't even do this stuff. And it doesn't even cost a lot of money. You can do a lot of times this stuff less than what people is paying for their internet service. And it's worth it if something happens. So it may never happen. Well, I don't get the money back. But you don't worry about getting the money back, because what you're going to do is be building wealth during the next 20 years. So this is an only good play for an investor, a person that has the identity of an investor that desires to build wealth. If you just desire to just do what everybody else is doing in this world, and that $100 is a big deal to you because you want to go spend the $100 instead of putting it on insurance policy, then don't worry about it. This is not the audio for you. So I wanted to give this to you because when that guy got killed in Atlanta, right? And I knew he was going to get killed because I knew how he was living, because like I said, is that I've seen this happen before. And it wasn't as if I was predicting his death. It wasn't as if I wanted him to die. I know how this type of stuff ends up, right? I knew what was going to happen to Duck, because I'm looking at your lifestyle. I'm looking at what you're involved in. And this stuff only goes so far. You know, I was telling somebody before from that area, I was like, are these dudes artists? Are these dudes just gangbangers? Because all I see from because if you just going to gangbang, you're going to end up dead one day, or you're going to end up in prison. And but two ways that's going to go. So it's no way in the world I would have been representing these guys as management. And I would have not have tried to take in some ways to protect them against their own behavior, but most importantly, protect their family against their own behavior, because I knew that was going. And so you, as a responsible investor and wealth builder, ask yourself, how can you use term life insurance to protect your family against something negative happening to you? If you got value from this, share it out. If you know somebody else that can get value from it, let them know about it. If you have any questions, hit me up in the comments. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.